Good afternoon, team. It's Wednesday. Uh, nasty couple days, huh? Nasty month, nasty year. It's been rough. It's been rough. I'm gonna start off with the 15 minute QQQ that I always show you guys here. Um, you know, back in these levels with 330. I mean, if 330 right now will be like, oh my god, this is awesome to be back at 330. Where this was already had dropped, like 10-15% from here, and we were all crying, and we're sitting at 291, 292. Um, like I was showing you, like a picture I showed you guys earlier. Um, Basically every single channel, it's just been a down. It's been a stepping down channel. This is the original one we drew, right? And then we hit our head in the 315 level. We trickled around for a little bit there, and that didn't last too long. That was just basically a day and a half, and then boom, we quickly went down to the 310 area. We gapped down from the 310 area, and this is still not filled. So we have this. We still have this gap up here in 350 that we haven't filled yet. We have this gap here now that needs to get filled on the way up. And we quickly went back down again to like the 295 level. Then we had this gap up here that got immediately filled. If you notice here, it got immediately filled right here. Within half a day. The next, that same day, it gapped up and it just completely went down. And then we hit our head again here at 305. So if you notice, these are all like those round, psychological numbers. 330, 315, 310, 305. Then here at 300, we kind of tried it and we just completely just fell apart. Below 295, and we're sitting here at 292. This is, and then we're in downtrending channel. I mean, we might come up here to 295. Now 295 is probably going to be 297. It's going to be now a new level of resistance. So we need to clear that. Go to 300. I mean, there's a long way to get back up here, to still get back up here, to not even break even, but to just be down 10% from highs. This is this is not a good place to be, speculating or bottom fishing or trying to gamble. Anybody buying the last few days have had their butt handed to them because it's just been going downhill. I've been taking pretty massive losses because I got, I mean, I've taken losses here that to me were massive, and look where we're at now. I mean, I saved myself, $10,000, $20,000 this last couple of days just getting stabbed out on already big losses that just could have destroyed the portfolio even more. So that's why you gotta take your losses and not let yourself get to a devastating 20, 30, 40%, 50% drawdowns, because to come back from 50% down, it's going to take you 100% of gains to just get back to breaking even. I mean, the math is the math. If you're down 10%, all you need is 11, 12% to get back to break even. You can make 10, 12%. If you're down 20%, you need about 25% to break even. If you're down 30, 40%, now you're looking at 50% return to break even. So you gotta, if you lost 40%, you think you're gonna make 50% if you're already down 40? It's very hard. So that's how much it'll take just to get back to break even, not even make a profit. So that's why the numbers don't lie. Know your numbers, know your stop losses, keep your losses really small. Don't gamble on like, oh, this is the low, this is the bottom. I'm gonna go big here and play for the bounce. That's not working out, obviously, guys. Okay. Um, on the daily, I mean, we're just taking almost every day we take out a new low. You know, we're over here. 2 days later, we got a new low. The next day, a new low. The next day, a new low. The next day, we kind of hovered around it. And today, a new low, like huge volume. Look at these big red bars. I mean, that's institutional distribution. That means that the big boys, the hedge funds and the mutual funds, they're selling. They're selling. That's not you and me. That's them selling. So there's distribution here. Um, it's scary. I mean, look at the weekly. I mean, look at nasty. It's like a fire hose just kind of like blah, vomiting. Um, it's just nasty. I mean, what's the next really? If you think about it, the next level is, well, I don't think that's the next level. The next level is probably somewhere around here in the 270 range. Can we hit? Can we drop another 20 points? Why not? We were here, and it's like, oh my God, 300 is so far away. We were at 330, 30 points. We're here, guys. We're at 295. This market is not getting better. Look at these distribution bars. I mean, look at this volume. That's huge volume. I mean, this only day. It's only Wednesday, and look at already the volume for the week. It's already almost at average, and it's only Wednesday. So the MT is at right now. It closed at 0.81, less than one. I mean, talk about I've never seen sub one. I've never seen it. I've never seen sub one until this week, until today. The lowest I ever seen was like 1.2, 1 point something. Never sub one. So this is unprecedented. So are we gonna get a bounce? Most likely. Is the bounce gonna be sustainable? Don't think so. Is the bounce gonna be like a lot? I don't know. I mean, you got 21 and you got the 9 here. You got the 300. So that's 9 points. That's 9 points to get to the 300. That's basically another 3% up. So the same thing we dropped today, we can go up tomorrow just to get back to where we were, 2 days ago. And that's, I mean, it's just nasty. Don't get involved with anything. I mean, everything's getting hit. Obviously, I'm not gonna give you any stock picks because I went through my scans. There's like nothing. It just, don't gamble on going long here. If you get a bounce tomorrow, so be it. It's not gonna last. Excuse me. Look at this SPY. 3 consecutive lower closes. I mean, it just, look at the volume. Just nasty. Everything's getting hit. I mean, video is down 10 points today, 5%. It just keeps going down. Just the big names, the big boys. Shopify. I mean, Shopify is at 318. I mean, this is mid-March, guys. Mid-March, a month and a half ago. It's down 50% in a month and a half. 50% in a month and a half. You would think, oh, 780 around here, 1200. It can't go any lower. It's a $300 stock from like 1700. I mean, this thing is down, 81%. This stock is down 82% from last year. That's just, I mean, PayPal. PayPal is down 75% from last year. Square is down 75% from last year. I mean, look at this week. Just this 1 week alone. Look at this big drop. But it's down 26% this week. That's just, I mean, Apple is down 20%. Apple is down 20% from its from its all-time high. Down 10% for the week. Down 8% today. Look at this. I mean, that's institutional. Look at that bar. That means there's institutions dumping the big names. Tesla down 68 points today. 8% on high volume. This is what gets me. I mean, look at this. This thing was down 50% the other day on the big news gap down. It's down another 16% today. This stock is this Upstart, guys, $28 stock from 400. It's down 93%. Look at this. Look at this big 1 week. It's down 93% from all-time high. Why would you want to hold something like that? Is it going to come back? I seriously doubt that Upstart is going to hit 100 this year. Seriously doubt it. I mean, I don't know. Let me see. Just devastation everywhere. AMD down almost 50% for the year. Everything's below the 50. Everything's below the 200. So you get the point here. You get the gist. I mean, let me see Microsoft. Let me just look at one more. That's it. Microsoft down 3% today. Nasty bar just been going down. Once the big names are getting hit, there's a bottom coming pretty soon. I mean, look at this gap down right here, and then just been going down from there. So if you want to gamble and say, oh, it's a gap down, look at this. This is too much. This is oversold. I'm gonna buy here. Play for this bounce. Really? You down another, what? 80 points, 90 points. This thing is, it's down 76% from its high. It's down 8% for the week. Amazon. Amazon's down 75 points. Look at this. Look at this, guys. Look at this. Amazon. Everything's getting hit. So I'm digressing here, but I want to get the point across. Don't try to predict. Don't try to wait for the bounce. I'm going to get the big names when they're down. They can go down another 15, 20, 30, 40, 50 points. And you're going to get holding the bag. Just wait. Wait till we get a follow-through day. In other words, we have, once we have an up day, that's day one, and usually on the fourth day, after the fourth day, if you get an up day on volume, that's a follow-through day. That's when you stop buying. That's when you start buying. So this was day one right here. This was sorry, let me clean this up. This was day one, right? So this doesn't really count. We had to wait for like this day and this day to be higher than this day still on volume. And then what did we get in the fourth day? We got a sell off. So there isn't any strength to even have one follow through day coming to play. Besides, we're below the 9. I mean, not even below the 200, not even below the 50. We're below the 21 and we're below the 9. So this is a perfect scenario when if you go up to like anywhere around here, this is extremely shortable. Because we're not doing this. We're not doing this. That's 100%. We're not doing that. So, again, stay engaged in the market. Like what I texted earlier. Stay engaged because you want to stay in sync. Just because you're not buying anything doesn't mean like, okay, you're done, I'm quitting. No, like you stay engaged because this will happen, guys. This right here will happen. You're gonna make a lot of money here. It will happen. You're gonna make a lot of money here. It will happen. We made a lot of money in this little rally. Those rallies will happen. You just gotta avoid you want to be out of these guys. So when these happen, you're mentally ready. You're mentally confident. You're not completely destroyed mentally or in your account, cash wise, to be able to take advantage. And you can make a lot of money in these periods. The market gives you opportunities throughout the year. Obviously, this is not one of them, but you got to stay engaged to be in sync with the market. So when it does turn, when you get that follow through, when things are setting up, when you get alerts, when you get breakouts and they actually hold and they continue higher, you're there. Boom, boom, boom. You're making money. Right now, it's not the time to make money. It's the time to not lose and to stay and keep your powder dry and keep the capital you do have. Okay? I mean, there's really nothing else I could tell you other than just stay defensive. Don't go. If you're gonna have to buy something on a big up day, buy one position, a quarter position. Test the waters. If that makes money and other things set up, get into another quarter, 50% position. See if that works. And if that works, then you slowly start upping your stake in the market. And if those two don't work, well, they were only a quarter, a 50% position, and your loss is very minimal. And then you dip your toe in the water, it didn't work, and you keep trying again. That's how you stay in sync, okay? So keep your mental capital strong, keep your cash secured. Risk management is very important. All right, guys, stay safe. Don't go crazy buying things tomorrow if we have a little bounce or something like that. We had supposedly a little bounce today. This morning, the futures were up in almost 200 points, and then the CPI numbers came out, and we just like down from there. Inflation just out of control. So it's not a good environment right now. Nothing to do with the economy, just with the market. Just don't worry about the economy, and also don't worry about the why of things. Don't worry about why this is happening. Oh, because of this and the why. It's irrelevant why. It's irrelevant. If the market is down 100 points, do you care why? It's not 100 points. You're not buying anything. If the market's up 100 points, Do you care why? No, you're making money. Things are working. You look at the price action. Things are going up. You buy and you make money. Why? It's irrelevant. What do you care? You're looking at price action. You're looking at your setups. You're looking at your systems. They broke. You got in. You stop your CEO and that's it. Simple as that. Why is this happening? It's because of many different things that you don't really give a crap about. Okay? You don't care why. Don't think about why. Don't worry about like the economic, the macro factor of this. Don't care about anything. Price action and volume. And then it's just simple moving averages. Simple as that. I mean, if you want to be complex, moving averages, it's kind of like your complex, other indicator. Volume and price and moving averages. You don't need anything else. If it's below the 50, you're not doing anything. If it's above the 50, you start dipping your toe in the water. Above the 21, ooh, you go a little bit heavy. Below the 21, you start skating back. Below the 50, you stop out and you go back to cash. It's just that simple. Trading is just that simple. Okay? So just keep things very simple. Right now, it's not the time to buy, not the time to be gambling. Keep your mental capital strong and keep your risk management protocols in place. Okay? There will be better days. We're not there yet. We have to be patient. Okay? You gotta be a good trader. Keep learning, keep studying, read books, study, do post analysis. I always look at my losses and my gains. I want to see what I did, what could I have done better, why did I get out at this particular junction, why did I get in, what did I see, and you start learning. You see a pattern that maybe you can increase your efficiency a little bit better and avoid mistakes. So you constantly are getting better and better and better. You want to see yourself right now, looking at yourself, 10 years from now, and looking back now and saying, okay, this is what you should have been doing. Well, start thinking that way. What is the optimal way for you to do things, and then just act that way, and then things will become optimally done. Very simple. All right, guys. I'll do the next video for the weekend with updates on my scans, and we'll see what the market does the next couple of days, Thursday and Friday. Stay safe, guys, please.